So let's look at salaries and wages taxes withheld. This is the component of salaries and wages which are not paid to staff each month, but are withheld by the business and paid to the tax body to meet their personal tax obligations. Now, these taxes being withheld have different names in different countries. For example, in Australia and New Zealand, this is called PAYG, or pay as you go. In the UK, this is called PAYE, or pay as you earn. And in the US, this is called wage withholding taxes. Now, in the model that we'll be looking at, this is an Australian example, so the analysis within this model will be labelled PAYG. Now, when we first bring in your historical salaries and wages taxes withheld balances into your financial model from your accounting package, these are brought into your historical balance sheet and are located within your employment payable section within the current liabilities. At the top, you can see that we have our salaries and wages taxes withheld line item with a historical balance spanning on the right hand side of the sheet. And if we scroll across our time series until our closing historical month of June 22, we can see that we had a closing salaries and wages taxes withheld balance of 106.0. Now, when we forecast your salaries and wages taxes withheld balances, this is handled within your working capital sheet and is located at the bottom of this sheet underneath your capital payables analysis. So you can see here we have our PAYG analysis, as this is an Australian example. So looking at our top, we can set our assessment year end, currently set to June, setting the 12-month cycle over which we have our assessments flowing on the back of, and we have our opening salaries and wages taxes withheld balance of 106.0 being pulled through from our historical balance sheet. Our first assumption is the number of months until we pay off this opening balance, currently set to 1, so that the entire balance will be paid off in July 22, our first forecast month. And we also have an assumption for the percentage of our 106.0 that will be paid in the specified month, currently set to 100, so the entire balance will be paid off. If we don't enter 100%, the residual balance of this will then be paid off when we make our next payment to the tax body, which is handled in our analysis down below. Now, we can see here that when we're forecasting our balances, we can set our assessment frequency, currently set to quarterly, and we can see our assessments happening every 3 months in our forecast analysis. We also have the average income tax rate, which refers to the average income tax rate of all staff members, which drives the proportion of salaries and wages that will be withheld every month. And then once our assessments have been calculated, we then have an assumption for the payment delay of this, with payments currently set to occur 1 month after the assessment. Now, if we scroll down and look at our assessments, we can see that we're pulling in our salaries and wages numbers per month, excluding superannuation, currently totaling 426.1 for the September quarter. Based on our 142.0 of salaries and wages expense per month, and assuming our 25% average income tax rate, we're then calculating salaries and wages taxes being withheld of 35.5 per month. With our quarterly assessments, we then take the sum of the amount withheld over the past 3 months, which reconciles with our 106.5 for the September 22 quarter. This then determines our salaries and wages taxes withheld balance at the end of the September 22 month, and assuming our 1 month payment delay, we can then see that this is then paid 1 month later in October 22. This is also summarized at the bottom of the analysis, as looking at the September 22 month, for example, we can see we have an opening balance of 71.0, increased by our 35.5 of salaries and wages taxes being withheld that month, giving our closing balance of 106.5, and the next month in October, we can then see the 106.5 being paid down. In the same month, we have our 35.5 of salaries and wages being withheld for the October salaries and wages expense, and therefore we have our closing balance of 35.5. The 3-month cycle of build-up and release of our salaries and wages taxes withheld balances can be seen across the time series, and this mechanism is commonly referred to as a sawtooth. Now, when we look at the financial statement impacts of salaries and wages taxes withheld within a 3-way financial model, if we assume salaries and wages expense of $100 for a period, assuming an average tax rate of 25%, we would then withhold $25 of salaries and wages taxes and adjust for this within the current liability section of our balance sheet. Our salaries and wages taxes withheld is also accounted for in the operating section of our cash flow statement as an increase in cash flows, reflecting the fact that this was not in fact paid in cash as assumed within our salaries and wages line item. So when focusing solely on the impacts of salaries and wages taxes withheld, this is an adjustment to the cash payments within the operating section of the cash flow statement, increasing our change in cash held and therefore increasing cash at bank. This is matched with an increase to our salaries and wages taxes withheld balance, ensuring that our assets and liabilities reconcile and that our balance sheet balances. Hopping back to our example, we can see at the end of September 22, we have our closing balance of 106.5 for our salaries and wages taxes withheld. Then in the following month of October 22, we have our 106.5 balance being paid off, which is offset by the salaries and wages taxes that we've withheld for the month of October, giving us a closing balance of 35.5 on our balance sheet and the net movement for the month of 71.0. If you want to see these impacts on our financial statements, we can head back to our table of contents and activate the financial statements sheet. Firstly, looking at our balance sheet, if we expand our employment payables section within our current liabilities, we can see that we have our salaries and wages taxes withheld balance. If we scroll across our time series until we get to our forecast month of September 22, we can then see we have our closing balance of 106.5 in September 22, which then decreases to 35.5 in October 22. If we then scroll down to our cash flow statement and expand our cash payment section, we can see we have our increase in salaries and wages taxes withheld line item, and in September 22, we have the balance increasing by 35.5, representing the taxes withheld within that month, and then in October 22, we see our net movement of 71.0. 71.0, this 71.0 being the sum of our 35.5 of taxes withheld in the month of October, as well as the payment of our 106.0 of the closing balance at the end of September 22. Now, when looking at the financial statement impacts of salaries and wages taxes withheld, it's important to note that this is simply an adjustment to the balance sheet and cash flow statement and does not affect the profitability of a business. This is an adjustment to our salaries and wages taxes withheld balance on the current liabilities section of our balance sheet and is matched with an offset in our cash payments within the operating section of our cash flow statement. This increases our change in cash held and increases our cash at bank, ensuring that our total assets match our total liabilities and our balance sheet is always balanced.